All right, good afternoon, everybody. James here, and I had a question on if I could show how I go ahead and find my earnings plays. So um, let's get started, right? I'll use Netflix here because that was the most recent one that I just did. Now, what I do, couple of step process here, pretty simple too, actually. We'll go ahead and bring everything up here. So on Netflix, right? At the time, which was Thursday, because Netflix had earnings Thursday after the bell. At the time, Netflix had an IV rank of 51.7%. That's up here where you can see it's now at 26. And the implied volatility for the August, right? You see that here? That was sitting at 65.7%, which it's now currently at 47. And then the back months, what's a back month? The back month are all these, right? All these down here, these are back months. These were sitting right around 55, 57%. So you can see they're also a little bit lower too. So first thing I do we have enough IV rank? Is it usually over 30? Because that's the absolute minimum that I really like to sell on. So that was over. Like I said, that was at 50%. Great. How was the current cycle? I did not want to do the July monthly at the time, right? That would have been the very first expiration. That was just too soon. I don't like to do the same week expiration. It's really hard to get out of things or change or defense, whatever it may be. It's hard to do other than just taking a loss and closing the trade. So I went out to August, right? That one, like I said, that had a 65%. The back months are at 55. So between the implied volatility having about an 8% possibility and then the IVR was nice and high, there's a lot of IV contraction possibility in this play. So then I like to then come over to the chart. I usually have a 2-year chart on, and I like to go through the earnings and just see the kind of movement that it does. All right. And now I know past performance does not guarantee future results. We all know that. But that being said, this has worked for me over the few years. So this is what I do. I come back, I check the previous earnings. I look to see the gap up or down. I don't care about what it does after earnings on that day, whether it rallies or fades or what. I look to see, okay, we closed right around 347 and we opened right around 377. Well, hey, that's about what? 47, 77, 30-point gap up. Okay, great. Then I'll go through and I'll go to the next one. Okay, little gap up, a little bit of movement, not much. This one here, I believe, was the big one that I was looking at, 60 down to 20. So it's about 40-point move. So that was a big gap, right? And I'll just go through these and I'll measure and I'll check them all out to see. So the biggest one that I found on Netflix in 2 years was a 40-point move between the market close and the market open. So then I come back over and I go back in here. And at the time, Netflix, when it closed, was roughly $530, $527 and change. So putting that play on, I went and I sold I put on the 435s and bought the 430s. And then I did the 625s and 630s. And that's about, at the time, 530 was about 100 points in either direction. Now, the expected move was right around, I think, like $50, something like that, right? So I had went double the expected move on this play to cover myself, make sure I'm still out of the money. And actually, and this is a good example, you can see here that if I did not do that, I would have been in trouble. Here's the play, right? Here's what I had on, and here's where we closed. We were pretty much centered. And after earnings came out, this thing shot down and it dropped all the way down to 449. Doesn't sound like a lot, but that was only $14 away. Now, yeah, that sounds like, oh, you're 15 bucks away, no problem. Not really, not for a $500 stock. It could have easily moved that, no problem. But had I gone to an expected move, I would have been in trouble, right? I would have been in the money. So going the expected move, or not, actually not the expected move, but going to the biggest gap up or down, and then adding some strikes onto it just to cover yourself a little bit, right? And in this case was perfect. I added on almost twice as much because it was a bigger product. Obviously, you're not going to do that on like a $10 or $20 stock, but I added on over twice as much, and it worked out in my favor. As you can see, I didn't fully get tested, but I was very close, and then it kind of ran up and then trended sideways at the market open, which was perfect because IV came out and we ended up closing this trade for 20% gain. Right, so you can see here, I put this trade on. I like to put the earning plays on during power hour, the hour of 3 to 4 p.m. That way I avoid any potential run up or down. Does it hurt me? Sometimes, because you might be able to get a little bit better credit. But, for instance, Netflix, I'll just show you. If I had put it on first thing in the morning, maybe, right around 8 o'clock my time, which is an hour and a half in, Netflix actually ran up 10 points. So I wouldn't have been centered. Now, I wouldn't have been that far off, but I wouldn't have been centered. Whereas if I just waited till the end of the day. So that's what I do. I wait till the end of the day, 99% of the time, and I put on the plays at the end of the day. In this case, I put it on with 36 minutes to go into the day. And then, guys, I'll check it out in the morning, see where we're trading. In this case, we were trading fairly sideways, still within range. So I was okay. I put an order in for 20% at before market opened, and within an hour and 20 minutes later, I got my 20%. Sold it for $1.60, bought it back for $1.28. That is exactly 20%. So that's what I do, guys. That is it. That's all I look for. Really simple process. Knock on wood, has worked for me for years now, with a very, very high success rate. All right, anyone else got any questions? Go ahead and leave them in the comment field. Give me a like button. If you haven't hit that subscribe button, hit that bell as well. Get notifications for any new videos. Thank you all and have a great day.